everyone, and welcome back to a brand new episode of Front Row on Economy.lk. Today I have in conversation Dumith Fernando, Chairman of the Colombo Stock Exchange, to talk a bit about the capital markets and its future outlook as well. Welcome, Dumith, to the program.
Thank you, Shiran, for having me.
Dumith, if I was to get to my first question, we've seen a lot of positive developments in the last 6 to 8 months, introduction of REITs into the market, the framework that came with it, the budget also outlining some more incentives. We've also seen a digitization process taking place within the exchange as well. If you could just talk a bit through that and the overall roadmap that the Colombo Stock Exchange has, and what can investors really expect in the next 12 to 18 months.
Okay, thank you, Shiran. And it's quite coincidental that today happens to be exactly the 35th anniversary of the Colombo Stock Exchange. So I'm glad to be discussing this with you. Yes, as you said, this year we've seen a lot of new developments in the stock market. I think the exchange itself has been working on some of these initiatives for quite some time, and you're seeing some of the results of that now. If you go back to what this stock exchange has been, the capital market has been defined in many senses by the stock exchange, and it has really been quite limited in terms of the product offering we've had. We've had a fairly robust equity market. Of course, that can improve and get bigger. We also had corporate debentures in our market. So the primary goal for us is a number of areas where we can increase the size of the market, increase participation in the market, increase the trust in the marketplace as a safe place to operate, and also to build sustainable profitability for all participants in the exchange. So one of the critical factors for us has been really how do we first of all get the market re-rated to valuations that are comparable to the rest of the region or rest of the frontier markets. When we started a few months ago, our valuations were at a steep discount to where the rest of the region was. I think that has now closed that gap, driven partly by the low interest rate environment, which is essential for a robust equity market to operate in. Secondly, we wanted to increase the market capitalization of companies listed on the exchange, whether that be equity listings or debt listings. So that is improving with valuations increasing, but we're quite aligned with the stated objectives of the government as well to increase the number of listed companies. So we have about 290 listed companies at the moment. We'd like to see if we can push that closer to 500 in the medium term. Also, we are working on introducing new products. So you touched on the REITs, which is a new introduction. We are working on allowing local companies to list on the foreign currency board, which was previously open only to foreign companies. This will enable companies who want to go international and who need foreign currency capital to raise capital on the board, and we are working closely with the central bank on getting that done. We are in the process of completing a concept paper and hopefully rules after that on gold trading products, so securitized products essentially backed by gold. This is not uncommon in other exchanges across the region. We have just introduced repos on corporate debentures, which will help that debenture market become a lot more liquid going forward. So we have a few other products in our roadmap, but these are things that we're actually working on at the moment.
Right, and I think some of these are really to address two areas, which is the liquidity side of the market and also the depth of the market. When we look at that as well, one of the key things that numerous times we hear is, maybe get some of the state-owned enterprises to list because of how big they are, their market cap, and also the ability for retail investors and also institutional investors to take part in it. The government has an intended policy of going down that line of listing a certain percentage of stakes. What do you think could be the catch for SOEs to really come in? Would it be improved governance structures, and could that really then make some of these SOEs more efficient to the economy, so they're not only having a big asset base but also being more productive to the overall macroeconomy?
Look, the number one catch, I think, is for us to all first understand that listing is not privatization. because I think in the past where the listing discussion for SOEs took place, the first bottleneck was this clash as to whether it was going to lead to privatization or not. Let me very clearly state, listing is not privatization. Listing is simply bringing on additional capital holders without giving up control of the government in these entities. So the benefits of it are primarily around capital raising, increasing the efficiency, productivity, and transparency of organizations, as well as giving employees a better chance of both share ownership as well as upskilling. So there are a number of benefits which, I think that's a long list. I don't want to go into that now. In terms of requirements from a stock exchange perspective, clearly if we are going to introduce new investors into any company, whether it's state-owned or private sector-owned, we clearly need to safeguard some of the interests of some of those minority investors. And that is essential for the company because that is what builds trust that brings in investors into these companies. So we're taking a very pragmatic approach. We consider ourselves as solution providers to the government when it comes to this. We're not telling the government, look, we've got a set of rules and SOE listings have to stick to that. We will engage with the government to find out what works for the government, because we have to get things moving. We have to get solutions that work, not solutions that look good on paper. And we are quite flexible. So, for instance, just yesterday at our board, we passed some rules to make debenture listings for SOEs more flexible than it is for corporate entities. We are looking at potentially, issuing or lifting the cap on non-voting shares, so that SOEs can list more non-voting shares which don't necessarily give up control. We would be quite open to thinking about flexibility in terms of reporting and governance in a way that we recognize the SOEs need to meet some societal objectives, not just a profit objective. And then we have also looked at models in countries like Vietnam. There is sort of an interim special SOE board, which is an over-the-counter trading board, where SOEs can come, list there, then get ready and prepared, understand what corporate governance should be like, understand what reporting and structures and listing rules will be like before they actually list on a proper exchange. So we could also create an interim solution like that to take a step-by-step approach.
Right. And maybe just one last question in terms of, I guess, the retail investors, which I think is a key part of a healthy stock market. What are some of the steps? I know CSE has in the past done a lot of engagement, going across the country, a lot of workshops. What's the plan to keep them engaged, keep them there for the long haul, and really be part of this capital market journey?
Yeah. So we have 2 or 3 avenues we are pursuing. The first one has been much talked about, the digitalization that was launched this year. That has different benefits. It first of all allows you to open an account sometimes within an hour and start trading from home. So anytime, anywhere, access to the market without having to visit a physical branch of a broker. Secondly, through that, we are also enabling real-time reporting back from the CDS or the Central Depository System on all your trades, and also enabling online settlement of trades, so you don't have to pass checks like some people used to do in the past. So that should enable a wider degree of citizens to participate. Now, it's quite notable that since the market reopened after the lockdown, about 80% of new accounts that have been opened have come from those aged 18 to about 35 or 40. This is in stark contrast to a majority of CDS account holders who were above the age of 50 in the past. So we are attracting that new generation as well. The second piece is really getting the word out there and getting more access. It takes a form of awareness and financial literacy. So we understand this is, really an important area. We have really increased our presence on things like social media to not just to promote but to educate as well. The SEC, Regulated Securities Exchange Commission, and us, we've got a joint committee working on public awareness of the stock market, which will also include some meaningful initiatives to drive financial literacy, which we understand is one of the reasons many are still quite hesitant to join the market. The third piece is how we really look at accessibility by taking the stock exchange to the regions. So we understand the physical presence can still be important. It doesn't have to be a permanent physical presence, but we will be looking to expand that, particularly in the Western Province.
I think that was a very insightful conversation with Dumith, talking about kind of what the roadmap for the capital markets is, the role SOEs will really play, and where does retail investors, the viewers at home who might be interested in investing in the market, could look to, and what are the avenues. Thank you, Dumith, for joining us in this front row episode, and to our viewers, stay tuned for similar episodes like this.